Delighted to be joined by Aengus Kelly, the CEO of AerCap, for the KPMG Airline Economics Global Leaders Report in Aviation for 2021. Aengus, thanks for joining us today. Obviously, it's been a very turbulent year in aviation. We have been in a pandemic since March. As the largest aircraft leasing company in the world, it's great to get your views. And I thought it'd be useful to start off on, well, where have we come since the outbreak? So I should mention we're speaking in early December here. How has airline performance evolved during that time, and what differences have you seen in the various geographies that you guys would operate in?
Of course, Joe, look, this has been a year like no other. We've never seen anything like this in the business. That being said, what's really important to remember in this industry is that people want to travel. It is a desire that humans have. They want to see the world, they want to travel. So yes, things were extremely dark in April and May on a global basis. And there were questions about, has there been a structural change to demand for air travel, to humans' willingness to travel? We saw the same kind of fears after 9/11. The answer unequivocally is no, there's been no change. And while we have seen a huge shock over the course of the last 9 months to demand, what we've also seen in geographies around the world, and this is a similarity in behavior, is that once consumers know it's safe to travel, they get back on an airplane as fast as possible. To give you examples of that, on the 12th of April in Europe, we hit rock bottom here at 2,099 flights. Normally, we would have 34,000 flights a day. That's an enormous drop. But within just 9 weeks, we went back to almost 19,000 flights. So once the consumers knew it was okay to go, they went. In China, within a 10-week period, we were back to 100% of what they were doing. This morning in Australia, Qantas announced they expect to be back at 80% of pre-pandemic demand in Q1. In Mexico, we're back close to 80%. In Brazil, we're closing in on 70%. So while there are still a long way to go in major markets in the world, particularly on the long-haul side between Europe and the US, the transatlantic markets, by far the most important market in the world, we do know that the consumer's behavior has not changed. Once they feel it's safe to fly, they will fly. And the biggest obstacle, has been the quarantine periods, and what we need is standardization around that. Now, we've had great news with the vaccines. Yesterday, the UK approved the use of the Pfizer vaccine, which is great news, the first country to do so. And on Monday, they'll be giving out their first jabs. So that is all very positive. Now, it's going to take several more months for that to filter its way around the world. And we certainly have our issues still in the US with the spread of the virus. But that being said, last week in the US, we had 7 million passengers. The US market hit the bottom on April 14, 2 days after Europe, went to 87,000 passengers. But again, within 9 weeks, we touched 1 million on the 4th of July weekend. And then last week for Thanksgiving, we hit 7 million. And another example about people's demand for travel is Golden Week in China last month. We had over 500 million people moved by road, rail, and air. So people want to travel. Now, I'm not saying there aren't problems. There are, of course, significant issues. But that's the really, really important thing. Are people going to travel? Unequivocally, yes. Yes, it's going to take them a little bit more time, but they're going to come.
And looking at your customer base and the asks you've had to deal with since the outbreak around deferrals or restructurings, have you seen those ease off, or how have they evolved over the course of the year?
Sure, there's no question they've eased off an awful lot. In Q2 in particular was when we had very significant levels, because that's when traffic collapsed. Government support hadn't come in, but the level of deferral activity has gone down by about 75% or so. If we look at Q2 over where we are today, there are certainly airlines that are in difficulty. There's no question about that. And as we reported on our Q3 earnings, in total, including all the airlines that are in formal bankruptcy process or other ones that are in restructuring, it accounts for 15% of our book. That's significant, but it's 85% that aren't as well. And so the vast majority of the world's airlines will indeed make it through to the far side of this. There's going to be casualties, that's a given, but the vast majority will make it through.
What's your take on where we're at with those casualties? Because you would look at the stress and tension in that airline market, and there's been a relatively few, right, formal restructurings, Chapter 11 type pieces on the airline side. Do you think, and predominantly driven by the government support that's been put in there, what's your take on where that goes from here? Do you think we're on the tip of the iceberg? Is there a chance or a risk that government support tap starts to get turned off a bit, and we're going to see a lot more airline failures?
I think it'd be a brave government that tells their citizens they can't bring in vaccines because they've no airline. I just don't see that happening in the near term. Now, what we have seen is almost 200 billion of government support, including what the Chinese government has provided. In the numbers quoted in the media here, we exclude Chinese contributions. We say 160, but in China there's been another 40 odd, we estimate. That's 200 billion of support that's been given. Airlines are a vital part of global infrastructure. And airlines are a vital part of specific economies and their infrastructure. So I do believe governments will continue to support airlines. They're not going to support every airline. That's not going to happen. And we will no doubt see a few more casualties over the winter. That'll happen. But as I said, the governments realize that the airlines have to survive. I think that will happen. Now, of course, many airlines are doing restructuring outside of Chapter 11 as well. And in the number I gave you, that's the totality of where we are in restructuring in terms of our book by value.
And looking at, say, maybe more the opportunity side, when you're evaluating airline credits now, it's obviously a much more difficult situation than maybe you would have been pre-pandemic. What are the metrics you're looking at when you're writing new deals, when you're looking for new customers and placing aircraft?
Well, first of all, starts the asset. You've got to have the right asset. That's the most important part of the transaction. And then you've got to try and pay the right price for it. If you do those two and you have a big operating lease platform and you know how to move airplanes, that's the most important part. Then you want to get stronger credits on a relative basis. Look, no airline is as strong today as they were 9 months ago. That's a given. So everyone is weaker, and you want to try and get as strong a credit as you can. But frankly, if you pay too much, you buy the wrong asset. The third part is irrelevant. You're going to lose money anyway. So you're trying to put those three things together to make sure that you get a fair risk reward in the transaction. I definitely think that there is a tilt towards the lessors having more leverage than they had over the course of the last couple of years, because there are less of us out there providing capital, and the airlines need us more. Very importantly, it's not just that there's fewer lessors, but there's fewer sources of capital for the airlines available. And while we have seen vast amounts of capital being raised, what we also know is that the airlines are encumbering their balance sheets more and more, so their ability to raise additional capital is further hindered. Now, that being said, airlines will want to simplify their operations. Airlines have so much operational leverage in them that anything that causes complexity adds cost. And mixed fleets add costs. Pilots, flight crews, booking systems, spares. It all adds significant cost and complexities to an airline's operation. And it may seem that airplanes are cheap on a capital cost basis, but if it adds complexity to an airline, that capital cost reduction won't be enough. And so what we're going to see is, even though the airlines' balance sheets are stretched, they will want to continue to move into newer technology assets. We're seeing that, and the pandemic is accelerating that trend. Also, the environmental lobby is moving that as well. That's a given. It's coming, and it's going to come in the US as well. We're going to see that happen. So what I do see with the airlines is, while their credits have become a lot weaker, I do believe that their demand for newer technology assets will continue, and they won't be able to buy them themselves because they won't have the balance sheet power. And also, any cash they get, they're going to want to delever, particularly if they have government funding. Government funding hampers your strategic ability to act, and very importantly, it will hamper your ability to remunerate yourself. And if we look back post the financial crisis, what we saw with financial institutions who had taken on tremendous leverage, particularly government leverage, their first thing they wanted to do was get rid of that leverage, particularly government leverage, because they wanted to be able to control their own strategy and remuneration. And it's been my experience that self-interest trumps pretty much everything in the human experience.
And therefore, if you look at that opportunity piece for someone like AerCap, and we'll talk to funding and liquidity in a second, where you've got a large war chest to deploy at the moment, those opportunities, do you think it will be significant sale and leasebacks with kind of airlines that mightn't have dipped into that leasing market before? Or how do you see that playing out?
It'll be a mix. It'll certainly be sale leasebacks. I think pretty much every airline has realized the folly of owning their own fleet. If we look at the biggest user of operating leasing in the world, it's Emirates. That has enabled Emirates to weather several storms over the course of the last decade because they've been able to return capacity. If you own an airplane and there is a downturn, you're stuck with it. You're stuck with the ownership cost of that airplane. That just is what it is. And you are never planning to reduce your workforce because that airplane is in your schedule. It's on your balance sheet. Whereas those airlines that had employed large amounts of operating leasing could look at their schedule and say, okay, well, we know that in any given year we can return X percent of our assets, therefore we can take down X percent of our workforce. Airlines that haven't done that have been hurt a lot more. They've been taking massive charges as well, non-cash charges. But, frankly, there isn't a non-cash charge because the liability, the debt that you used to buy the airplane is still on your balance sheet. It's got to be serviced. So I would say that we're going to see a continued increase to leasing because more airlines have now seen the flexibility of it that it brings in managing capacity. And as I said, for other reasons of excess leverage. Now, that will manifest itself in sale leasebacks for sure. There hasn't been a huge amount of activity recently because the manufacturers haven't been producing too many airplanes. They've been stuck with the production problems in the MAX. The NEO has been slow, and of course the pandemic has pushed everything back. But that's certainly going to change. And what we're going to see is an increased demand for operating leasing.
Aengus, maybe just shifting gears and on to the debt markets, looking at aviation finance and lessors. AerCap has been remarkably resilient in your ability to raise funds in the unsecured market pretty much in the last 6 months. You can talk to rates, right, but they're pretty impressive, right, in what you guys have been able to do. What are your views generally on the AerCap side, and maybe looking more broadly at your competitors and those that are probably a layer below you in terms of size and scale, as to where the debt market is? If we talk about this, demand that will be there for leasing, it needs to be funded, and there is a chatter and the challenge on the debt side. How do you see that playing out? Maybe starting with AerCap and what you guys have done, and then looking more broadly at the leasing space.
Sure. So we've raised seven billion now, give or take, as we come into the 1st of December over the course of the last 8 months on the secured and the unsecured markets, mainly, but the majority of it are the unsecured market. And overall, the all-in cost of funds has come in less than 4%. Now, given, of course, when you went back to the height of the pandemic in March and April, spreads were all over the place. And the market was closed. So look, that's been a very competitive level, and that's mainly unsecured funding, obviously, which is miles inside where the airline complex has been raising money. Some of them were failing to get deals done at 11% coupons in May. What I would say is that for the major lessors who have access to the unsecured market in size, and there aren't that many really, there just aren't. Maybe there's a handful, maybe 7 or 8. I don't think there's 7 or 8 who on a standalone basis could access the unsecured market. I think there's a handful at most who could access the unsecured market in size. Now, what does that mean then? So for those handful, and you know who they are, I don't need to name them, I believe they can access that market. But for those who are reliant on a much weaker balance sheet, a lack of liquidity. And the thing with banks is, it's if you have money, they'll lend you money. If you don't have money, it doesn't matter who you are, they're not going to give you a nickel. So we came into the crisis with $10 billion of liquidity. When you have that, that gives the banks so much confidence. Whereas if you're an ABS transaction or an ABS arranger with no liquidity, other than a maintenance reserve or an LC, no one's going to lend to you. And no one's going to put additional liquidity in. So I think those type of structures, the ABS market, I think for the senior bonds, I think you're going to do great. I don't think it's going to be a problem. There's probably some great value in those bonds. But lower down the capital structure, even though the collateral may well be worth certainly more than where the trading price of the debt is, an inability of those vehicles to refinance themselves just because of an absence of liquidity will probably lead to some of them having certain issues. And I think the same logic will apply to smaller businesses that don't have significant amounts of liquidity because people won't lend into it. If banks see that someone already has a huge amount of liquidity, they're happy to throw more at it. If they see that someone isn't, and they're thinking, I'm going to be the first over the top here, they're not so keen.
And the logical extension to that is a retraction in concentration. So is that your expectation, that you would say you'd look at, as you say, it's probably 5 or 6 very large players that are there that'll have the ability to pull on funding in this market, that'll have the ability to write new transactions. By extension, you'd probably expect those top guys to take more of the market. Is that where you see it going?
I think it's true, but the top guys can only do so much as well. I think it's true. I do think, we've had the tourist capital come into the sector in the search of yield over the course of the last 5 years. And many of those thought this was a spread business. It's most definitely not a spread business, as they found out now. Without a global operating platform, it's almost impossible to run this business. That was always the case. Many didn't see it when they equated the credit risk of a startup in India being the same as a US Treasury. They found out that just is not the case. And without an operating platform, you can't deal with that. With those issues that are in the business. Morgan Stanley found out the same thing in 2010 when they bought AWAS. Or 2008, they thought it was a spread business. It wasn't. So I do think that we'll see a thinning of the herd. There's no question about that. But it's still, if you have the platform and you've invested in the platform, this industry will provide a very attractive risk-return basis. I firmly believe that when we get to the far side of this. Yes, there's been dislocation now because of the shock that has hit the industry. But for those that put the money in, built the platforms, and so many talk about the amount of Asian money that came into the sector over the last 5 years, and of course it did. And many are talking about the demise of that. I think it's premature to say there's a demise of a very significant Asian presence in this industry. I think those institutions from Asia that have put in significant amounts of capital building a global platform or buying a platform, they're here to stay. That's a reality. And I think they'll continue to grow. And they'll be outside those top 5 or 6. They tend to be funded by very big bank ownership structures.
Can I pick up on that tourist capital point, right? There would be a view that what you have here is something that is fundamentally different to the 08-09 global financial crash, because wealth is still there, capital is still there, and it's still trying to find a home. And some of the conversations I've been having at the moment is people who are still have touched aviation, are still very, very keen to get back into it. And that's predominantly around US private equity, who's come into it in a larger space. And even those that might have been, expect to be burned on ABS type E notes. When you say that flight of tourist capital, who are you expecting to depart the scene?
I think what you're going to see is the entities that have come into the business who've invested significant amounts in companies where there's no platform or a de minimis platform. And they found that this really isn't the way to go, because this is a very complicated business. This is a very complicated assets. Taking airplanes back, moving them around the world, reconfiguring airplanes, dealing with an order book with Boeing and Airbus. And with the engine manufacturers, this is an extremely complicated thing to do. So my view is that many lessons will have been learned, like there is out of any crisis, lessons get learned. So those people you're talking to, I think they might say, okay, right, we actually believe in aviation as an industry to invest in. What we don't believe in is trying to do it on the cheap any longer. So if we're going to invest, we want to make sure we're doing it with a platform or a manager that has scale and capability. The days of having, one man and his dog in Miami or here on Stephen's Green in Dublin, running a business. I think they're over. I think those days of when people were, going around the world trying to pick up some startup capital for a fund where they had no real infrastructure, and they'd walk by a Qantas sales office and say, "Oh, I know Qantas. I have a relationship with them. I just walked in and tried to buy a ticket." Those days are gone.
So fair to characterize that investor sophistication has moved along, right? I think that's very fair to say, and there is more of an appreciation of what's going on in there. But probably the theme that follows from there around some of those lessors outside, let's say top 10, top 15, institutional capital behind it, a lot of liquidity. There is a significant layer below, as you've highlighted, right? Or you've got the asset manager class, as you say, those that plan to be serial ABS issuers, and that's a market that's currently closed. Again, the distress has been slow to feed in, probably from the good liquidity position that lessors came in, even the smaller players. How do you see that playing out, right? So we've seen some formal restructurings on the airline side. Where do you see that going on the lessor side? We've seen the example of Nordic, which was very early around that scheme of arrangement, different type of model of business, right? Do you think we're going to see more lessor distress? And if so, when do you think that's going to bite?
I think for significant lessor stress to happen, the parents probably have to get into trouble as well. That's for the bigger guys. I don't see that happening. I don't see any of those entities that I've spoken about. Maybe there are companies like big financial institutions who've come into the sector, but those guys are not going to have a bankruptcy of their leasing company subsidiaries. They may be subscale and they may say, okay, listen, we're not going to put any more capital into it, but we're not going to have a subsidiary of a major financial institution go into bankruptcy. Now, where I think we may see a different level of stress is where there isn't a parent, and where you have finite group of assets. We have a couple of smaller businesses are for sale at the moment. What will happen to those? Will the banks push harder on the equity to say, look, you got to get out of the way, a bit like they did with NAC? I think you could see some of that on smaller scale. But for the bigger guys, I don't see that happening. I would see in the smaller stuff, maybe sub $2 billion businesses. That's what we're seeing at the moment. Sub $3 billion. There's a couple of guys at the moment who are looking for bids on their platforms. Well, they're not platforms. They're portfolios. But at the moment, the equity is still looking for too much, and so at some point the banks may say, look, you just got to get out of the way.
And that feeds in probably to the opportunities point. AerCap has always been opportunistic, right? So you follow the cycles. You think back to Genesis a decade ago and ILFC thereafter. And I heard you talk to this before. You'll deploy your capital in the way you see fit, whether that's share buybacks, whether that's strategic and major acquisitions. Where are your thoughts currently, right? So do you think we're going to move into a situation where there might be very good opportunities for a large lessor with a great platform that has a lot of liquidity?
I think there will be, Joe. I think there will be, and I think they'll continue for a while. I think they will continue for some time because, as I said, this business does provide a good overall risk return for professionals in the business. Because on the supply side, we have touched on supply. On the supply side, you have a duopoly. That duopoly ultimately acts rationally. Airbus and Boeing this year could have put many airlines out of business by saying, you're going to take the airplanes you ordered, we're going to take your PDPs, and if you don't take them, we're going to put you into bankruptcy. They didn't do that because they know that they lose orders when they do that, the airline, and they know that airlines can come back, and most do. And this is the behavior we saw from Boeing and Airbus, after 9/11, after the financial crisis, where they managed supply into the market in a regulated fashion. They could have done it, and the market could have regulated supply itself, but that would have been chaotic, where you would have airlines filing for bankruptcy all the time, Boeing and Airbus losing their order books. So on the supply side, I'm very confident that the actions we've seen by Boeing and Airbus that we'll continue to see will ensure that supply doesn't overwhelm the market. On the demand side, we know it'll come back. It'll take a bit of time in different markets. And in terms of our own competitive landscape here, I do believe, as I said, that we won't have the same level of capital willing to come into the industry for several years to come. So I do believe that the opportunity set that we'll see will be significant over the coming years. Say leasebacks is an obvious one. We'll have to see what happens with Boeing and Airbus? Are there opportunities there? And then, as you referenced, and as I mentioned, maybe there'll be some smaller guys who may need to be cleaned up as part of the process. And we look at all of those, and certainly as there's if there's opportunity in any of those, we look hard at them.
And in sizing up those opportunities, you've obviously had a conscious move to newer technology aircraft, and you can see that playing out in a positive fashion for you now, and you've moved away from the wide body as well piece. In sizing up those opportunities, does it need to fit with that overall ethos, or are you just going to look for something, if something makes very good economic sense, you may well strike on it?
You may, but it's got to make strategic sense in the long term. It's got to make sure that of course, look, there's a price for everything. That's obvious. But I think directionally, you want to make sure you're doing things that strategically are going to make sense for you. That's what I would say. So the focus would be towards the new technology assets, and in the current technology assets, you want to stay away from the younger versions, because I just don't see a 2017 777 flying in 2042, which is what a 25-year depreciation policy would tell you. I certainly see a 2017 a 777 flying in 2030. So if you've one that's 12 years old today, you're grand. But if you've one that's a couple of years old and you need your depreciation policy says it has to fly until 2042, that's not going to happen. So I think when you talk about opportunity, be very careful. I think if you're buying the new technology assets, you make sure you buy the right ones. There are some that aren't as popular as others. And then if you're buying current technology, no matter how attractive it is, it's fool's gold buying young versions of current tech assets.
And on that side of opportunity, you guys have generally not been in the habit, as you say, of renting out the platform. It would have to make an awful lot of sense. You did one kind of strategic partnership over the last couple of years, NAC, I want to say.
Yeah, in Saudi Arabia.
Yeah. Is that an area you'd see yourself going into more again, or is it focusing primarily on the own platform at the moment?
It'll be primarily in the own platform, that's for sure. I mean, where we have done it is where we're facilitating a long-term relationship with a partner, and we are selling assets to those partners. As we go forward, would we consider where, okay, we may say to someone, well, there's no real money in the long term in just servicing. It's not like the funds business in this industry. You've got to have an ownership position to make a bit of juice on it. And does it have to be 100% ownership? No, but it certainly has to be a reasonable ownership position. So if we had a partner, they said, okay, look, there's a portfolio here. AerCap, would we do it 50-50, or maybe we take a majority and you take a significant minority? But I think buying portfolios just to manage them in the market, there's so much effort in buying a portfolio. There's a lot of effort in managing it. And over time, you find that the management fees, they don't generate an enormous amount, particularly when you look at the SG&A cost of running a significant platform. You really want to have an upside in the ownership to make it work.
And you mentioned the OEMs, and maybe just we'll pivot back to those for a moment. How they've obviously everyone's had a huge impact here. You've talked about the rationalization of their behavior. You've talked about the issues that they've had. Where do you think they sit now, 9 months into this crisis, from their own business perspective? And then how do you see them interacting with lessors into the future? Do you think the pandemic and the macro factors we've talked about is going to shift behaviors between OEMs and lessors?
I think it will. I mean, the OEMs knew it in their heart of hearts, that taking an order off someone who just has a pulse is not good business. And it inflates their order books in the near term. And, on paper, they're getting a premium because they're dealing with someone who doesn't know what they're doing. But they knew in their heart of hearts that those guys are not reliable business partners. And we've seen that now, that definitely, I think, it used to be the case. I remember there was an Asian lessor who went to Boeing at the Farnborough Air Show after the financial crisis, going back a good bit now, 10 years, and said, I'm interested in buying some 737s. And the head of leasing Boeing at the time said to the CEO of the company, but what's your sales pitch? What are you bringing to the table? And the guy said, I have a lot of capital. Yeah, we're in a financial crisis right now, and we need people who can place airplanes, and you can't. I can't go to the decision-making bodies in Boeing and say, here is an order we should take. because what we have found is in times of stress, those who don't have big platforms are more trouble than they're worth. So I think what we'll see there again with Boeing and Airbus is more caution around who they're willing to take orders from. Look, clearly over the course of the last 2 or 3 years, we saw a number of people come into the business. They thought they could order airplanes and place them. But ordering airplanes, specing it, we have more people who spec airplanes, just spec airplanes in AerCap, than I'd say any other leasing company, bar GCAS and Avalon, probably have in their marketing team. And that's an idea of the scale that's required. The expertise you need to have to build an airplane for a customer, to understand how to deal with all the vendors on a cost-efficient basis. It takes years and years and years to have the IT systems, the knowledge, to do all that, to set up those relationships with the vendors, to know what the right terms are with vendors. And that's something that has come to the fore, and the relationships are self-evident to lease airplanes. And so I think that with the manufacturers, we'll definitely see a more selective element. Now, I've no doubt they'll forget that again in 5 or 6 years' time. And they'll be at the air show banging their chest saying, "Oh, I did 1,000 airplanes." How many of them are real is another matter altogether.
Now, how does we had this conversation 12 months ago. We would have spent a lot of time talking about the MAX. What does that mean? No one's had time to think about it or focus on it. It's certified now. How does that feed back into the macro position here from a supply perspective, from where that aircraft will sit in the aviation world going forward?
I can't wait to fly in one. I can't, I'll be the first one to sign me up.
Full stop, right?
Yeah, true. But no, I'm really looking forward to flying on a Max airplane. I think the Max will be a Max 8 in particular. I think will be a very good aircraft. I think that airplane is very competitive with the Airbus A320neo. Clearly, where there is a deficiency against Airbus is on the bigger airplane, the 321, be it with the Max 9 or the Max 10. But that being said, the Max 10 can fly a lot of the missions that 321 flies. I just can't fly them all. And so what Boeing have to ask themselves is, well, is there a price point where the Max 10 can be competitive against the 321? Clearly, at the same price, no one's going to buy a Max 10. But there is a price point, I suspect, where they could make it competitive. Now, a lot of that will come down to General Electric. They will be the key decision maker on this one, because when you buy that airplane, you'll also get an engine agreement. And will General Electric be willing also to take a reduction in the hourly rates they get under flight hour agreements in order to make the airplane competitive? It's not just a Boeing decision, it's a General Electric decision. The two of them will have to figure that out. Bear in mind, of course, that, well, I should say not just General Electric, it's CFM, of course. They also power the Airbus airplane. So now they're 100% exclusive on the Boeing airplane, so maybe they're incented to help Boeing a bit there. Although there are some agreements that they can't help one manufacturer more than the other. That's one that so I do think the Max 8, as I said, will be a very good airplane. And then it's up to Boeing and CFM how competitive they want to make the Max 10 with the 321. And I think the tool to use is pricing. Airbus used it very effectively on the 320. The 737-800 was a fantastic airplane. Single source, more seats than the 320. But Airbus had a very good airplane. It wasn't quite as capable as the 737-800, but Airbus just discounted the price by 8%, and they were able to get half the market. It's something Boeing just have to think about. What is that discount to get a material share in the market? Because you can't afford in this industry to let your market share slip too much. This business isn't iPhones where they're disposable, and if your customer drops you this go around, you'll get another shot at them in 12 months' time. You won't get another shot for 15, 20 years. So if you lose market share now, you don't have a shot to get that back with that customer for 15 years minimum. And so that is something that, as the market picks the airplanes that his individual customers pick the airplanes they're going with, Boeing have to be very cognizant of that over the course of the next 2 or 3 years.
You obviously understandably divested for a number of Max orders over the course of the year, but have still a very significant amount on order. fair to say you're still optimistic over how that aircraft will play both within your fleet and the wider space over the coming years?
Definitely. I think the MAX 8 is going to be a very good airplane. I think that airplane, as I said, is very competitive, and we'd have no qualms about buying that airplane.
You touched on a couple of final questions. You touched on ESG, sustainability, a little bit earlier, taking a back seat, right? We would have spent a lot of time talking about it 12 months ago. How do you see it will come back on the agenda? We've seen a political change in the US, which I think you touched on as well, is going to have a change. How do you see that piece interacting on the aviation side over the coming years?
Look, ESG hasn't gone away. I mean, it may have taken a back seat in the headlines in our industry, that in the leasing business, but I can tell you, talking to airlines, the governments now are putting money in. It's either a direct condition or they know it's coming down the track, that what they'll have to do is over time move into newer technology assets. And the CEO of Airbus was quoting the cash for clunkers. Now you have to be careful about Boeing and Airbus, of course. They have very much their own agenda, which is they would love to see government subsidies to remove A330s, 777s, and take in A350s and 787s. It's not going to happen overnight, but the trend is there. And how governments are going to push or incent airlines to take new technology or punish them for having less fuel efficient assets is unclear as yet, but it is coming. And it can't be this situation where it happens as a shock right now, because the airline industry can't take it. The governments know that. They've pumped a ton of money in. But certainly, I think over the course of this decade, you're going to see that coming. And that was something, look, we saw coming. And that's why AerCap's portfolio strategy since 2014, because we see more than anyone in the world. We could see what was happening behind the scenes with airlines and how they were thinking. And that's why, we sold over 600 airplanes that are, as we say, current tech assets, and why we have more new technology aircraft in our fleet than any airline or lessor in the world. So I think that over the course of the 20s, hopefully the roaring 20s, that we're going to see governments push on that. It won't happen overnight because, as I said, the airlines, they know that there is a very weak, financially weak business there, but a vital part of the economy. But I do think over the course of the coming decade that we will see a continuing push for governments to move the airlines into the most efficient types of aircraft.
And I say that's the practical piece, right? How you probably manage the emissions piece better. How do you manage the message better, right? So you had this reduction in emissions for the newer tech aircraft, but because you've an increase in air travel, probably the overall percentage of emissions that aviation causes might remain static, or as other sectors come down, potentially tick upwards. How do you manage the message around, technology is improving things? There is an absolute need for aviation, whether that is from hospitality or trade perspective. Who helps manage that message better between the airlines, between the OEMs, between lessors? How does it come together? Because it seems quite disjointed at the moment.
I think we do a very poor job on it as an industry, and that's the OEMs, the lessors, the airlines, the MRO providers. We're all in it. We all have a vested interest. We're such a public industry as well, because people can see planes in the sky all the time. But we do a terrible job of defending ourselves, particularly when I compare ourselves to the agricultural industry, which does a far better job and is far more effective in every jurisdiction than aviation is in defending itself. I think that I would hope now, with Willie Walsh taking over as the head of IATA, I think IATA is a natural body to do it. I think it's fair to say it hasn't been particularly great at it in coordinating a message from its global membership on that one, or dedicating a fund for some professional PR around it. It can't be that it's just ad hoc, that the head of IATA is being interviewed on TV and says, oh, aviation has done great things. That's ad hoc, that's useless. What we need to have is a much more focused, directed campaign on a global basis. And that will require money, that requires resources. But I do think that if IATA said to all industry participants, look, this is our plan, this is our strategy, when we're going to hire, you have to have professional consultants. You'll be glad to hear that, Joe.
Always.
Absolutely. I'm not sure KPMG are in the PR business, but I'm sure you'd turn your hand to it if you thought there was a fee in it.
Sustainable futures business. We'd be happy to help.
That'd be great. That'd be great. But I do think that something on a far more coordinated basis has to be done, or else we're just too easy to pick off on an individual basis. The Green parties, you do hear many politicians talk about aviation. It's just so easy to point, say, tax them. They're bad guys. But these politicians may be well-meaning, but they're not looking at the relative benefits and the relevant impact aviation is having versus other industries. And without a consistent message, without resources, on a coordinated fashion, we're going to continue to get picked apart. So I think it's very important that over the coming years, and as soon as possible, that there are resources on a pool basis, on a global basis, put towards this. The current situation where you have senior members of the industry, be it airline bosses, lessor bosses, the head of IATA, being on TV saying something in a newspaper, that's hopeless. There has to be a far more coordinated message, and as I said, resources have to be put behind it.
And just in closing then, your outlook, right? So we would have talked about 12 months where you saw the sector going. There was broad optimism, maybe a soft landing, but pretty good macro factors. We're in a fundamentally different place, but how optimistic or not are you when you look out about, just focusing on AerCap, about what 2021 will bring?
2021 is you're still going to have your challenges in 2021, but the most important thing of all is the consumer's willingness to travel. And as I said, post 9/11, there was a fear for a long time that we would never be able to have mass movement of people through airports because of the security problems. It took a long time for everyone to agree on security protocols, the types of equipment to be used to screen passengers, both getting on the airplane and their luggage getting into the hold of aircraft. And there was real concern that airports could not cope with that. Of course, we adapted, we changed, we did that. We're doing the same here. This is more severe, but we have a vaccine. We are seeing standardization of protocols. So I believe that will happen through 2021. So for me, people's willingness to travel is definitely there. It's demonstrated to be the case. I do believe it's been led by leisure. People say, was this the demise of business travel? Look, people said when the video conference calls were invented, or that conference calls in general became commonplace, that this would be the end of business travel. That was 20 years ago. That's not the case. In the last 20 years, business travel has grown exponentially. So yes, it's going to be slower to come back, but it will most definitely come back. I've no doubt about that. Joe, if you just think about your own behavior, if you're having Zoom calls with a client, and then one of those Zoom calls, you see your competitor walk into the room with your client, what's the first thing you're going to do?
I'm going to be on that airplane.
You're going to be on that airplane. And it's the same for every business in the world. If anyone sees a possibility of gaining an advantage over someone, if I have a competitor who I know is going to sit at home and cower in fear, I want to bury them. We're going to be out there. We're not going to be hiding.
Aengus, I'd like to thank you very much. As always, great insights, and I wish you and AerCap very well over the coming year.
Thanks very much, Joe.
Cheers. And we're done.